For thousands of years, gold has been the ultimate symbol of wealth. Kings wore it, empires fought for it, nations stored it in vaults, and people trusted it because it was rare, physical, and difficult to destroy. Gold became valuable not because it was perfect, but because humanity had nothing better. But history does not stop. Technology does not pause out of respect for tradition, and money, like everything else, evolves. Today, we stand at a turning point where gold is no longer the most logical answer to the question of value preservation and growth. That answer is crypto, and more specifically, Bitcoin. Gold's main argument has always been scarcity. There is only so much of it on Earth, and mining it is slow and expensive. But that scarcity is not absolute. New reserves are still discovered, mining technology improves, and supply continues to grow every year. Gold's scarcity depends on geology and effort. Bitcoin's scarcity depends on mathematics. There will only ever be 21 million Bitcoins. Not approximately, not theoretically, exactly. This limit is enforced by code, verified by a global network, and immune to political pressure. No president, no central bank, no institution can vote to increase it. That alone makes Bitcoin a fundamentally stronger store of value than gold in a world ruled by monetary manipulation. Now let's talk about performance, because emotions aside, numbers do not lie. Over the past decade, gold has barely managed to protect purchasing power. Its returns have been modest, slow, and often disappointing when adjusted for inflation. Bitcoin, on the other hand, has been the best performing asset class of the last decade by a massive margin. Even accounting for volatility, its long-term trajectory has destroyed gold's returns. Gold preserves wealth. Bitcoin creates it. That difference matters, especially in a world where inflation is no longer a theory but a lived reality. Since the global financial crisis of 2008, and especially after 2020, politicians and central banks have printed money at historic levels. Trillions of dollars were created out of nothing. Savings were diluted. Currencies weakened. And while gold barely reacted, Bitcoin surged because it was designed for exactly this moment. Bitcoin is not just an asset, it is a response to broken monetary systems. This is why politicians are uncomfortable with it. Bitcoin removes control. It removes permission. It removes the ability to quietly devalue people's savings through inflation. Gold sits in vaults, controlled by governments. Bitcoin sits on a decentralized network controlled by no one. And that brings us to institutions and whales. For years, crypto is dismissed as a toy, a scam, or a speculative bubble. But look at what happened when serious money entered the conversation. Hedge funds, asset managers, corporations, and even sovereign entities began allocating to Bitcoin. Not because it is trendy, but because ignoring digital scarcity in a digital world is irresponsible. Big traders follow incentives, not ideology. And the incentive is clear. Crypto represents asymmetric upside in a world drowning in debt. Gold does not evolve. It does not integrate with technology. It does not power financial systems. Bitcoin does. Crypto enables instant global transfer of value, programmable money, and financial systems without intermediaries. Gold cannot compete with that functionality. Emotionally, the shift is already happening. Younger generations do not think in terms of votes and bars. They think in terms of wallets, networks, and digital ownership. They live online, earn online, transact online, and naturally gravitate toward a form of value that fits their reality. Gold belongs to a physical past. Crypto belongs to a digital present and future. The argument that Bitcoin is too volatile misunderstands what volatility actually means. Volatility is the price of admission for growth. Gold is stable because it is mature and stagnant. Bitcoin is volatile because it is early and expanding. Over time, volatility decreases, but only after adoption increases. Every major asset class in history followed this exact pattern. Now, ask yourself one honest question. If gold were invented today, would it ever be adopted as money in a world of smartphones, satellites, and instant communication? Or would humanity choose something borderless, verifiable, divisible, programmable, and immune to political interference? The answer is obvious. Gold was the best option for the world that existed. Crypto is the best option for the world that exists now. This does not mean gold becomes worthless. It means gold becomes secondary. A relic of an older system. A hedge, not a future. Bitcoin and crypto represent a monetary evolution, not a rebellion. They are not trying to destroy value, but to redefine it. And history has always favored systems that are more efficient, more transparent, and harder to control. So the conclusion is clear. If your goal is merely to protect wealth from collapse, gold might still have a place. But if your goal is to participate in the future of money, to grow with the next global financial architecture, and to align with where power, technology, and adoption are moving, crypto is the superior choice. Gold protected the past. Crypto will shape the future, and the future does not wait for a tradition to catch up.